right, let's talk about your money. With markets experiencing more volatility lately, many investors are taking a closer look at how their money gets managed. So you may have heard of terms of active versus passive investing, but what does that really mean, and how can you jump into this, right? So joining us this morning is financial advisor Gerrod Galliano. Always thank you for being here.
Hey, thanks for having me back.
Absolutely. So tell people the difference between the two.
Yeah, real simple. If you have a 401k or a plan at work, a 403b, and you just keep shoving money into it and leaving it alone,
Yep.
That's passive. You're still adding money, but you're not really actively changing the allocation much. And then active is you see some of the stuff going on with war or dips, or maybe you're overweight, you're making changes, you're trying to take advantage of something that's going to happen.
And do you recommend people do that on their own, or is that where you say, this is where we come in as experts?
No, it's definitely something people can do, but the irony is the stats say a lot of the best investing, especially when you're still working, is to leave it passive. The more you tinker with it, the more the human emotion element can step into it. And when you go through things like last year's tariffs or the war this year with Iran, it's really difficult to jump in. Imagine trying to jump in and out when you have a news headline every couple of days. We're done. We're at the negotiating table, that's over. So it can get real dicey. So a lot of times passive is recommended for the youth, and then active maybe in retirement when you're trying to make sure you maximize all of that.
And that is, I don't want to put it just in the box of, oh, if you're getting ready to retire, but if you are getting ready to retire right now in this environment, is it recommended that you become an active investor?
I think either way, if you're passive or active, you want to have a strategy. We like kind of a hybrid strategy where you're looking at, all right, what if this happens? What if we have a real serious dip? What if we have a real serious bull market where we're up 20, 30%? What are we going to do? Are we going to actually take some chips off the table? If so, when? So the real essence of all this is you need a plan. You need to know what you're going to do and when and why. So if you have those things, then you at least have an action to take, whether it's a more passive strategy or a hybrid.
Okay, so we have a Public Service Commission meeting today to discuss even more development of data centers right in our own state here. I want to ask you if investing in this tech, these tech stocks, is it safer than what we saw happen with the dot-com bubble?
Sure, these tech stocks are still more volatile than your average stock on the S&P 500. So they're more volatile than a Walmart or a Costco or whatever. But compared to the 2000 tech bust, they're making money. So that was the big difference. In 2000, 2001, it was about future potential. These companies are actually getting contracts. They're making good revenue. There's still potential for a bubble. What if the AI bubble kind of just deteriorates and the money's not there? But the big difference, on paper, they're profitable versus maybe the pets.com dream never come into reality.
All right, let's leave our audience with one thing to do or think about as you are watching the next week of developments in the stock market.
Yeah, look, let's go back a year. We had the April tariffs, and it felt like it was totally unpredictable. The markets were all over the place. We had a loss of like 12% in 2 days last year. You fast forward a year, and the market ends up 16%. So here we are. We just went through, what, 4 months of negativity. We're back in the green by like a little bit as of yesterday. So the big thing to take away is have a plan, don't panic, and know that these things over time will work themselves out. Just make sure you have a plan for it.
Gerrod Galliano, thank you so much for being here.
Hey, thanks for having me back.